is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Phil in Puerto Rico. Hey, Phil, what's going on?
Hey, Tom, doing great. Just wanted to thank you guys and the whole crew. Best content on the internet. Really appreciate everything you guys are doing.
We appreciate you growling and prowling with us out here. Phil, how did you find us?
I just typed in live trading in YouTube one morning.
Cool.
I was looking for any type of live trading room. You guys came up. And,
awesome.
I know quality when I see it, or at least I like to think so. And, you guys are just a dream. I appreciate everything you guys do.
Welcome to the Tiger family. We appreciate you growling and prowling with us.
My pleasure.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for tuning in, spending your afternoon right here with me at TFNN. And we got a market, folks. Two-way, red across the board right now, and the NASDAQ 100 leading the way with Meta off double-digit percentages. And right now, folks, we are, as I mentioned on that 3 o'clock update, we're coming right into the lows of the session. You talk about some volatility. This is 200 points from where we were at 10 a.m. this morning, let alone where we were at about 7:30. When you're talking about what now? We were up at 284. You're all the way at 320 points below where we were at almost 8 a.m. this morning. You get a little volatility on the open, and that low at 940 in the NASDAQ 100, 25,942. Okay, and you see we had some buying come in, a little bit of a floor to the market, and we're coming in to test that price point right now. NASDAQ 100 off 300 points, off 1.2%, and let's jump to Meta real quick. That's some of the context of what's going on. Meta off 11.5%. Microsoft, decent numbers, but they're spending a lot of money. We're going to talk about that, off by 3.4%. And Google, the winner last night, but giving back a majority of the gains, up by 3.1%. So NASDAQ leading the way down. S&Ps were off by 0.7%. Same deal, testing the lows of this morning. And you're talking about a 40-point pop in the S&Ps, and we've given it all back with 1 hour left to go in the day. The Dow leading the indices, basically flat. You're off by 11 points at 47,786, but we have given up 400 points from where we were early in the session, and the Russell off by 11 or 0.5%. Yeah, Bitcoin trading with some volatility to the downside. Bitcoin testing an important area, and we'll see. This area of about 107,000, it's been support for some time. Okay, it was resistance, right? You're talking about resistance going back to December of last year, January. You chop around here from about May until July. You bounce there in August. You bounce in September. You bounce in early October. We'll see if it holds. But critical area for Bitcoin, 107,000 right now. You jump over to yields. Quite the reaction to Chairman Powell yesterday, that they are far from the December 10th meeting being a cut, and we get the 10-year right now at 4.10. 4.10. We're down by 7 ticks. With higher yield, you have dollar strength up to 99.52, and gold trading with strength as well. 4,037 right now in gold. Now you back it up, okay, just to show you that originally you had a lot of gold strength, right, when the dollar was weakening. The dollar weakens from 110 down to 98 in the beginning of the year. And during that period of time, from the beginning of the year, you have gold. Nope, that's not the year. Yes, it is. Go from 2,700 up to 3,400 when the dollar got destroyed. Okay, so priced in other currencies, it was not the same deal, but priced in a weak U.S. dollar, you better believe that gold got expensive during that period of time. Now, compared to where we are right now, you back things up to September 17th. Okay, September 17th, gold was trading at 3,700, folks, 3,700, September 17th. Okay, compare that to the dollar. That was the last Fed meeting. Okay, you had the dollar at that point at 96.21. Look at the strength we've had over the dollar over that time. And since we've had that acceleration from 96.21 all the way up to 99.53, you've had a gold contract that's gone from 3,700 up to 4,400 and then back down. We're still above 4,000. So over that period of time, from 3,700 to above 4,000, gold trading higher, as our man Steve Rhodes taking a look at, across all currencies right now, with few exceptions, but quite a run. Okay, Mr. Zuckerberg, he is spending money yet again, and the market's a little bit worried, to put it lightly. How's that for a weekly bar? Now, as I mentioned, $88. $88, folks, right? $88. That's the week of when? Halloween 3 years ago, almost to the day. $88, okay? And we're off by 85 today. Now, it's a different world we live in for the numbers that they're creating 3 years out from there, but let's talk about spending. How about 89%? Okay, talked about it this morning, but yeah, that's the number of how much money they're spending. Between Meta and Microsoft, $78 billion just last quarter, up 89% from a year earlier. Okay, and there's more. We'll get into some of those numbers, as in there's more than just that. Because I got a couple articles pulled up here. Yeah, Microsoft, part of that number is what they're backing into OpenAI. All right, we'll pull it up. But nonetheless, you got spending in focus, and you got Meta off 11.3%, and you better believe it's going to be a big day of volume, folks. Look at that spike in the volume. We're not even done. It's going to be a big final hour. Markets just broke lows. Okay, we got the NASDAQ 100 for the day. Did we? Right to the tick almost. 942. Okay, we're right up against it right now. You know, my take is Amazon's going to be under pressure tonight, folks, off 2.4% already, and they got a lot to live up to, especially when you look at the AWS numbers from a quarter ago, right? Last quarter, you come into those numbers at almost 236. Okay, within a couple days, you were down to 210. There's a lot of expectations for these companies. Google, just mammoth numbers. We'll go through these a little bit later in the hour. Google, yeah, mammoth numbers, and meanwhile, you rip lower from where we were prior to the open, pushing 300. We're at 284. Google's one of the strongest equities. Google and Microsoft right now. Look at this run, right? Doubling in price from where we were at the April lows, from 142 to 291. And we check in on NVIDIA. Off 2%, and we are back below the 5 trillion mark. That number, about 205 and change. For NVIDIA, we're at 202.76, down $4. NVIDIA off 2% right now. All right, we jump to some of the other equities. Eli Lilly with their numbers, strong numbers. You're up by 4.7%. You gave it back on the open and then the conference call, and you're higher by almost 5% on some strong numbers. Those GLP-1 drugs. Take a look at the weekly. You know, we get some real volume on their last earnings. The one thing on this chart, folks, right there, okay? You're still kind of lower highs and lower lows, right? We're challenging the upper end of that, but Lilly with some strong numbers, up by 4.7% on their numbers. Yeah. How about Caterpillar yesterday? Up $1.24 today. It's been a strong earnings season. We get Amazon and we also get Apple after the bell. Apple. How about it? We're going to come into those earnings literally at the all-time highs. Apple up $1.66 to 271. NASDAQ off 310. We'll come right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. And yeah, we just broke that mark in the NASDAQ 100. New session lows off by 1.3%. It's been an extraordinary run. The volatility in this market in two ways right now. We got something going, folks, down by 1.3. And Amazon, that bar is going to be high, man. You know, I'm an Amazon bull in the long run, okay, but in the short run, those AWS numbers, they were vastly underperforming Azure and their competitors, their last go-around. And, you know, where do we come into their numbers yesterday? Almost right where we were 90 days ago. So we'll see how Amazon holds up. The bar is pretty high right now. Apple as well. You want to talk about expectations, folks? We're trading at all-time highs. From April, you're up $100 in this equity, okay? And $100 in this equity, 15 billion shares outstanding. That's $1.5 trillion, folks. $1.5 trillion in market cap added for the run since April. You're at $4 trillion on Apple. And yeah, NVIDIA pushing 4.9. Let's take a look at the volume of the two equities coming into their numbers. So Amazon, you're off by 2.3%. Their numbers after the bell. Yeah, look at the selling off the top yesterday. You make that high. Well, look at that bar we're coming into. Right, you come into the September 19th bar when you do 97 million. That was options expiration Friday, if you remember. So much volume across the board. Equities on the close come into that area. We're trading lower by 2.4%. And Apple, it's almost been a one-way trip from that acceleration in April. Apple's got some good volume here. There's the Friday of September 19th. Options expiration for September. Now, you get above it on lighter volume, but almost everything just crushed it. Options on the close. You have a nice sign of strength up to 264 10 days ago. And, yeah, some good volume yesterday. You know, yesterday's volume was the most volume that we had done since that high on October 20th. You get above these two prior days, you do it with volume. And we'll see. The last 40 minutes, probably not going to get above where you are. We're doing 37 million so far from 55, but Apple after the close. Yeah, Fiserv. So check this one out, folks, okay? I mean, some of what they were doing out there, the numbers are amazing. You're down by 8%, okay? You're down by $5.60. That's in another move where yesterday you traded from 127 to 72. The CFO is out. They have surprises, and they're digging into the books. And their CEO, right? I got to pull this article up. Their CEO was able to divest, sell his shares earlier in the year. Okay, by selling those shares, he walked with 500 plus million. He was able to defer taxes as part of that divestment, as long as he reinvested them in T-bills or a mutual fund. The market's up 15% since that period of time, and because of that, he had to pay the no taxes there, as opposed to if he had held them now, they're worth like 230 million. And you add into it the irregularities in the accounting that went through up to that period of time, the story's going to have some legs. And the last thing you want to have is not to be able to trust the books that the company has, because if that's the case, you don't know where anything is going. And so, yeah, that is totally what's in play. And from having some connections in the industry, folks, okay, they were putting out, so they sell, whether it's different Clover, okay, let's see what they even say, okay, because Clover's a big one in terms of payment processing, everything they do. I know Clover's listed in here, yeah, as well as Clover, okay, software as a service. And one of the things they were doing, from people I know in the industry, is that they were trying to push out, listen to this one, right? They were trying to push out Clover sales at a 30% discount if you signed up for a full year ahead, okay? Now, this is payment processing, Clover terminals, and so they were trying to push those off to merchant distributors, okay? And the deal was that you could pay for the year, get a 30% discount, and you would sign up for the year, get a 30% discount, sign up, right? Pay for it as you came, and they would store it. They were playing some numbers with forward revenue, okay? And that is just from within the industry, that they were giving you a 30% discount to sign up. They would store the goods so they don't even send them to you, right? They recognize that revenue. And it's all allegations. It's all third-person hearsay, okay? But that's a problem. And this is a mammoth company, okay? They're not going under over this. You're talking about a company that's $35.2 billion, even with this pullback. But guess what, folks? The charts, does it get much worse looking than that? Doesn't. Does not get much worse looking than that. There's your monthly, okay? You're back to where we were in 2017. Whew. Imagine, that CEO got out here. And he got out, no, to be fair, he did get out here, okay? And he got out here, and he did it tax-free and reinvested the money in the market that went up 15% since then. It's remarkable. Well, all right, we got some selling going on in this market. We'll see where we find a floor. We get the NASDAQ off 1.4% right now. Yeah, look at Amazon testing the lows coming into their numbers, off by 2.7 right now. Meta, 11.2. All right, let's take a look at the crude contract. We'll jump around. Crude. Get a little bit of a pop this morning. Take a look at the daily. Yeah, we got some buying on crude. Look at the way we accelerate on volume. Okay, the ramp up, you do 300,000 contracts, you do 356, you do 711 when we push to $62, and you trade lower on 287. We chop around on 250 and 217 today. And talk about Fiserv again. This one was on the front page of Bloomberg. Client backlash on fees. There's more going on than that, folks. Yeah. Over and over, clients repeatedly voiced frustration. They've had enough of the superfluous fees they were being charged for Clover. Okay? I know people in the industry. They were trying to sell Clover at a 30% discount if you signed up for a year, and they would keep the merchandise so that you didn't even have to store it. Okay? Yeah. This was happening earlier this year. And they have, in the same way, the people I know, they say the same thing, though. Their fees have been extraordinary, and they've been trying to fight back, but guess what? They have a commanding position in that industry, and they used it, but there's more going on than just the fees. Because that blew my mind when I heard that story. Okay? So there you go. You know, they got a real problem. And it's more than just a drop-off of, yeah. So keep your spikes up on that one, to put it lightly. take a look at the S&Ps. Look at that volume. Ugh. Okay. Jump over the VIX right now. Get the VIX spiking at 1717. And that's a perfect segue. We're going to be coming back with our man Tim Ord. We're going to be talking some ratios. We're going to be talking some markets. And we'll see what Tim has to say as we get a little negative action. We got a VIX spiking. And we get the S&Ps off by 55. NASDAQ 100 off by 337. And yeah, Metashares off by 11.3%. Amazon and Apple after the bell. We're coming right back, folks, with our man Tim Ord. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps off 51, NASDAQ 100 off by 320. And right now, as we do each and every Tuesday and Thursday at 30 past the hour, we're going to talk to our man, Tim Ord. You can reach Tim at his website, folks, ord-oracle.com. You see our man, Tim Ord, right there, as well as the past results right on that website. Check it out. And then under the services tab, right at TFNN.com, folks, he's got 2 outstanding webinars, The Secret Science of Market Tops, How to Identify Market Tops, and the 6 Secret Ratios every trader should know. Tim Ord, good afternoon.
Afternoon. So, shall we start?
So I'm going to hand it off to you if that's all right, Tim. I talked to you, folks. I got to jet out for an appointment early. Tim is kind enough. He's going to take over, and he's going to walk you through the slides as he always does. I got to jet out early. Tim, I appreciate it, man. I know the listeners, the viewers, they're looking forward to it, and I'm going to listen to it when I'm in the car running to my appointment. I appreciate it, man, okay? It's all yours, brother.
All right. Thank you. All right.
Thanks.
Let's begin. So, this is the daily SPY. Over the last couple of days, if you notice, we did close above the upper Bollinger Band actually 3 days in a row, yesterday, day before, and the day before. And I outlined the other times that has happened. It's another time, actually, I drew them in red circles. And usually you get a short-term pullback. You know, sometimes it's just a day, sometimes it's a week. That's what kind of lead bearish. But also, I had 2 different things going on. I'm only bearish for the short term. I think the market's going to still keep hitting higher highs. But over the, couple of days, I'm actually getting kind of bullish signs right now. But Fridays are usually the best days to trade because they make you sweat over the weekend and find out if you made a right decision come Monday or you didn't make a right decision. But anyhow, on a short-term basis, I'm still out of the market. I'm not long. I should be long. I got a couple of signals back in September that I should have took, and I kind of waited too long, and they got away from me. But anyhow, on a short-term basis here, we did close above the upper Bollinger Bands 3 days in a row. And the last 2 days, that's yesterday and day before, the SPs were up, and also the VIX was up. Okay, that's a very short-term sign. And you should get a pullback. Well, today we're starting to pull back. I did this chart earlier. We're actually lower right now. But ideally, I like to get into the support area, give or take around the 670 level. Might be a little bit less than that, might be a little more than that, but that anywhere in that vicinity where I have outlined in pink there, or shaded in pink, are other times when the trend got above 1.2, and they all occurred right around that 670 level. The last times before, we had some back in lower levels in that 645 range, and actually back here in August we had looks like about 635 range. So anyhow, once you have panic, in other words, trend closes above 1.2 or higher, and you get a couple or 3 or 4 or 5 trend readings of 1.2 or higher in a specific area, that area turns support. As you go back into that area, normally you get panic again. And I think that's what's going to happen here. Can we get back down to 670? I don't know. Hopefully, yes, that would actually add to support if we do, because chances are we'll get a trend reading above 1.2 in that vicinity, and that'd be a great buy setup. I'm still neutral for right now. This is a little bit less fuzzy picture, but you can see here and here and here, we're above the upper Bollinger Band. And you can actually see now that this is the VIX, the bottom window is the VIX. We had 2 days up in a row. The VIX is also up in a row. Here, if you notice today, we're down. I did this earlier. We're actually down lower now. But the VIX was also down. So that's bullish. If the market's going up, the VIX is going up, that's bearish. If the market's going down, the VIX is actually going down also. That's bullish. Can you get a couple of days of that? Maybe. But I'm looking long to get in this vicinity here. This is that range where the trend reached panic. So we got another percent to get, 1.5% to get in that range. So that's what I'm looking for a bullish setup. Also, going back to chart 1, we're up 5 days in a row. I made a big outline there, up 5 days in a row. 5 days up in a row, predict the market will be higher within 5 days, 83 or 82% of the time. So we were up 5 days in a row going into yesterday. Now we get at most 5 days down, maybe less. I'm thinking less. Probably tomorrow could be a bottom if we keep going down. But that's the reason why I want to get along the market here. Up 5 days in a row is 82% chance you'll be higher within 5 days. Is nothing to bet against, I guess. So anyhow, that's why I'm looking for the S&Ps, and hopefully we get down to that 670. So, all right, that's the S&Ps. Let's flip over to the gold market. Okay, gold market is starting a massive rally. Actually started in last year in August. I had some signals back in August 2024. I gave some longer-term buy signals. Those longer-term buy signals have turned into reality. So what's going on now? This chart goes back to there it is, 2006, and what it is it's a bullish percent index for the gold miners index / GDX. So it's another ratio. So I put an RSI on this ratio. I used a 10-period RSI, which is basically a 2-week RSI instead of a 14-period RSI. And I marked all the times the RSI got below 25. We're at 19.44 right now on this RSI. And then I drew lines down from the times when the RSI got below 25. And the bottom window is the weekly GDX. So this is a GDX chart. So this is a weekly RSI. So it takes quite a bit of acceleration to get either up or down to get an RSI below 25 or get an RSI above 70. 70s are bearish. Anything below minus 25 is bullish. And so all the red lines going back are the times when the RSI got below 25, which we're, again, right now we're at 19.44. So we're looking at some sort of a worthwhile low in this vicinity. It usually works pretty well. Sometimes they go down a little bit more, but most times they're picking out the bottoms really well. Even back in the rallies of 2008 up to that 2011 high. So we'll come back to this chart. So I'll wait. I'll be here.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
All right, welcome back, folks. I'm Tim Ord. I'll be your host today, and you can find me at www.ord-oracle.com. So let's look at this chart. We were talking about this chart when we left. And anyhow, the RSI hit 19.44. Anything below minus 25 is bullish. This chart goes back to 2006. Not counting the current time, but other times this has happened with 11 times. We had one failure in 2013, and that was a vicious bear market, but all the other times it's worked. If you do that, if you work out that percentages, is in other words, these signals are about 91. They actually are 91% accurate. So we're at some sort of a low in this vicinity. Chances are is 91%. So do these things take off right away? Well, most do. This one in 2000. Went sideways, or 2015 went sideways until January 2016 before it took off. This one here looked like it went kind of sideways for a spell. This one is basically right smack at the lows. This one went sideways for a spell. But anyhow, worst case scenario, we're at a low. We may flip sideways, but it is a low of a worthwhile low. I'll put it that way. So we're kind of bullish on a short-term basis. So let's look at some other charts here to expect what's going on. To keep showing this chart in the past, it's pretty rare. The data only goes back to 2010, but we had two other times when this indicator, which is a bottom window, which is the 50-day average of the up-down volume for GDX. Previous times it got up around 30. This time around it's got around 32, but I think both other times are around 27 area, give or take. I think this was a little over 28. But anyhow, it identified upsurges in the market, even though we did pull back from basically 84 to 70. This indicator, if you notice, is still staying high. We're coming in right now at 27. Pretty much where this high occurred back in 2016 and pretty close to 2019. So we're still very strong in the market. So I'm thinking we may flip sideways a little bit here, but in general, I still expect this market to actually keep moving higher. Moving higher before the year's out, it's a possibility. We got 2 months to go. It's hard to say how long consolidation's going to last. You know, sometimes they're short-term last, a couple of weeks, sometimes a couple of months. But previous times of this signal, they only have two other times. One lasted 5 months before the rally started to consolidate. This one rallied for another whole year, and that was including the pullback of the COVID crash of 2020. But so it looks bullish, and we're not actually pulling back here. We're staying relatively high. This indicator reached, I think, about mid-September, and now we're a good month and a half later, and this indicator is still staying high. What that says is a lot of gold stocks are still doing very well. And I've been saying that these major gold stocks, really the ones that have ran up since last August, are now consolidating. And those are the big ones. Newmont Mining's, AEM, all of those are starting to consolidate. CDE, another, that's a silver stock. But now they have huge run-ups. They are consolidating. So what's going to go next? Excuse me, let me get a drink here of water. So anyhow, gold market's still strong. So on a short-term basis, here's maybe what's being played out. If you notice here, we closed above the upper Bollinger Band. I just wanted to point that out. And if you notice, you usually go into consolidation. And here we pulled all the way back down to the lower Bollinger Band, which is actually a bullish sign. We closed below the Bollinger Band on October 27th. This is a daily, and we rallied up, drew a bullish engulfing there. We're kind of following around right now, but we had a 3-gap play to the downside, which is a candlestick pattern that predicts once the third gap is formed, the market will go back up and test the first gap. Well, the first gap came in around 84, so I think we're going to find support in a couple of different indicators. You remember this one. This is giving a buy signal. And so 3-gap play, third gap down. So I think 70 is probably get to the downside in that vicinity. We rally up to 84. And what from 84, I don't know. We may go back down to 70 again. But ultimately, at some point, we're going to keep going higher. So how do you play this? Well, I'm long. Not ideally, I'm long in the 75 range in GDX. I'm going to see what happens up around this 84 range. There we go. Up this 84 range, we test that gap on lighter volume. I may, we'll see how it goes. Right now, I'm staying long GDX. Will it be a longer term play? It could. Depends how volume goes on this next rally. So we'll have to be watching that, and we'll keep you posted on what's going on. But bigger trends up. A couple of things I want to point out is how to pick stocks. And I brought this up on Tuesday's show. And basically, volume momentum are the two most important things in the stock market. You want to have volume going in the direction of the momentum, and you want momentum to be up. You don't want momentum to be down and have volume go up, because that's just going to whip in the whipsaw. What I want to point out here is this is the Bell Sun Mining, or Belo, B-E-L-O, Sun Mining. This is a monthly chart. It's the Bollinger Bands. If you notice right there, got real narrow. Right in that vicinity. Market was going sideways. And finally, it had a big surge in volume. If you notice, this volume's way higher compared to the months. This is a monthly chart before it. So that's a sign of strength off of a low. And that's how do you get a bicycle. Has to have a sign of strength off of low, and has to close above the mid-Bollinger Band. Once you close above the mid-Bollinger Band, that turns the mid-Bollinger Band up. That means, in general, momentum is up on the monthly time frame. And that's a perfect scenario for a market to rally in. So anyhow, this was a buy signal back in, I don't know, looks like November, December of 2024. And you got the buy signal about a nickel. Right now we're up around 20 cents. So that's up, I don't know, 400%, thereabouts. But anyhow, that's how that works. Just another one to point out. This is another, RIOTO, which is another, I think it's a silver stock. You got one back in 2020. There's a big jump in volume, higher than, several months before it. You close above the mid-Bollinger Band, there's the music. So we'll get into a couple more stocks towards the end of the show here. I'll be here. Come back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back. I'm Tim Ord, your host today. You can find me at tim-oracle.com. That's Tim at ord-oracle.com. So let's keep going forward here. This is how to pick the gold stocks, I guess. So anyhow, as we said before, this is back in 2020. This is our Rio 2 Limited. I think this is Canadian stock, but they do have a symbol for the American stock too. But anyhow, I'll give a buy signal. You had a sign of strength through the mid-Bollinger Band on a monthly chart. Here, if you notice, gigantic volume through the mid-Bollinger Band. That's your buy signal. So in general, it looks like about 40 cents, their take. The buy signal came. This is Canadian. We're up around 227 as of today. So that's 500%, 5.5%. So anyhow, so let's look on So these bicycles are gone. So are they good buys? No. They were good buys back in December of 2000. This one looks like about December 2023. So let's look bring them up. So what's going out? So what I'm thinking is going to happen over the next several years, or actually at least several months, if not longer, a lot of these gold stocks that haven't done anything for quite some time are going to come to the forefront. And I picked out 2. There's a lot more out there. This is a monthly chart of West Haven Corporation. This is symbol for the New York Stock Exchange. I guess we're gone now. This is a buy signal, and this is West Haven too. So anyhow, this is a buy signal worth looking at. So thank you for listening, and tune in again next Tuesday. That's when I'll be on next. Thank you.